Hello, traders, and welcome to the weekly Spy the Market for the AOD Equities team here at Market Traders Institute. My name is Andrew Dixon, Senior Options Analyst for the Equities Division. So, we are going to take our usual look at what the market is preparing for us as we commence the official trading week this time of uh, April the 2nd. Um, Last week we actually closed out the very last of the first quarter of 2017. I can't believe that that is already done, gone, and it might as well be, ancient history at this point because this week presents itself with a lot of potential for a brand new slate literally to get started. So let's go ahead and take a look at what are going to be some of the top things on the radar as we move into observing whether or not this next quarter and next week will take us into a desirable direction. We're going to start by taking a look at a couple of the obvious things that we're going to be hearing all week long. And we're going to start that by taking a look. Market Watch has got an article, economic data on watch as sleepy stock market awaits earnings season. Now, we got to admit that after we had kind of the shock, I guess we could say, a couple weeks ago, the market selling off and hitting some lower points, we've really kind of been in limbo. Granted, we've recovered. This last week gave a nice breath of recovery to the dramatic amount of pullback that we had overall in the last 2 weeks. We still are showing some nervousness, a little bit of indecisiveness from the investor side of things as we are moving through some of these next dimensions in the politics of our new administration, as well as some of the market gauges. But the fact of the matter is that part of what is currently happening, despite the fact that we recovered some of our momentum from last week, is that earnings season is once again on the horizon. And as a matter of fact, we no longer have that perfect, it used to be until the last earnings season. It used to be that if Alcoa was reporting earnings, boom, we had everything figured out, and that was the beginning of earnings season, so on and so forth. Well, Alcoa kind of went two different ways, if you will. They didn't exactly split, uh, so to speak, in the sense of we think of a stock splitting. We think about price action differential. The company itself kind of separated out, excuse me, into two different um, divisions, if you will. Anyways, it kind of confuses the situation, but I'm here to tell you that, as it turns out, yes, we are starting earnings season basically uh, on a light note this week, and next week we go full swing for what would be the real earnings season. And so what that basically means is, okay, we are starting to get ready to fire up our volatility again. And this is good. This is good because we have many things that the market will already be setting up volatility for, and so this will work in coordination with that. Let's stick to this week specifically. Next week is where I really start to get excited about earnings on a full major swing because we kick off the financial division of our earnings big time next week. But this week is not left without its major players. If we actually take a look, I think the article mentions a couple of them here. If we just go ahead, let's just jump in and take a look at the earnings calendar. Why don't we do that and address it here? So we have Nova Gold Okay, going into tomorrow, that's after market close. We have, I think Thursday really is the next big name. Is it Thursday? No, I'm sorry, Wednesday. Bed Bath& and Beyond, kicking it off for retailers after market close on Wednesday. We also have Monsanto kicking off before market on Wednesday as well. Um, I will say Monsanto has been a little bit difficult to find. As an options trader myself, I tend to go around looking for things that not only have stock liquidity but also have options liquidity and versatility. Well, gotta tell you, Monsanto's been a difficult one as of late, so not holding my breath, but it's an attentive company worth watching your options for. We move into the next day, Constellation Brand. When I will tell you personally, when Constellation Brand kind of kicks in, I know that we've started our earning season as far as the heavy lifters for consumer staples. Over the next few weeks, we'll start to see Coca-Cola, PepsiCo. Um, we're gonna see some other of the big names, Budweiser, and all of those starting to come out, and again, kind of shaping different subsectors in the consumer staples arena. And it gets very exciting because you can start to kind of line yourself up as to multiple ideas to have at the same time, okay, without having to necessarily be in the middle of the volatility of the stock itself that is reporting earnings. Okay. Um, the market's also probably going to be looking at CarMax and da, 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 that's going to be it for Thursday. And then Friday, of course, is more of a dud because Fridays are duds in the world of earnings. Now, we won't go into too much detail, but like I said, the next week, that's when things really start to get exciting. We start to get sector movements and volatility. And I feel that the very first major sector on the horizon for, hold on, it's not updating here. Oh wait, I'm sorry, it is. For the capacity this week, actually, is going to bring us to Thursday. We've got a little shift in dates here. Usually, these companies all report on Friday. Huh. Okay. Well, Citigroup, um, Commerce, JP Morgan Chase, PNC Financial, and Wells Fargo. If you could, I mean, if you wanted the sector to move all at once, the best time to do this is at the beginning of the earnings season and again, it's usually on Fridays. I'm not sure where we've, April 14th. Okay. April 14th, I'm sorry, is Good Friday. That would be why. So, markets, different hours and all that. So everything's been moved to the day before. That makes a lot of sense now. I understand. Okay. So that's the day you want to see action and activity. That's going to be the day. The market tends to hold its breath for what happens lately or as of late in Wells Fargo. And this is of course going to be under the microscope because there are some new issues in the investigation for um, the fake accounts and all that they've done that are coming to light. So we're going to be wanting to see how the market reacts to that. Although, FYI, if you have followed earnings with any great depth, you'll know that um, in the last several earnings quarters, since the drama of all that has happened, Wells Fargo really hasn't suffered as far as an earnings move. And in fact, the very first earnings that we had post all the drama, they flew up, like the price of the stock soared. And the earnings move was ridiculous and it wiped just everything else that was going on. out of concentration. So anyhow, that's next week. It's not this week, but we're kicking off the earnings season this week, and that's the part that is the most important in the attention that we're giving. And so we've got some companies that we are going to be looking at for that momentum. Now, it's really not the only thing that we're looking at in terms of this week. This week is providing quite a few different factors besides the earnings starting. It's really a slow roll in the earnings. Some of the bigger things excuse me, are the economic data points. Oh my goodness, I'm eating my words here. That we're going to be seeing. If we actually switch gears to the economic calendar here, okay. Now this is not as quite as intense as it was last week, but we still have several Fed heads that are going to be speaking. What actually is pretty intense. Wait, here we go. Okay, so we have Jeffrey tomorrow. William Dudley, Mr. Dudley, speaking twice this week, and we have Daniel Tarullo speaking this week as well. Now, these are just the Fed heads that are speaking. We also have, and of course, this is going to be an international highlight. We have the president meeting with Chinese President Xi Jinping, if I pronounced that correctly, and I apologize if I did not. But that meeting starts, I believe it is tomorrow in Florida. And so all eyes are going to be on that as well. It's actually there's kind of a back and forth as to how that's going to go, and there's a lot of speculation that's going to be very rocky. And that brings a lot of politics back into how the market might react to something, because you're going to have there's every possibility of a how do we call it, a domino effect, where you start with the factors, excuse me, you start with the factors affecting um, larger political scheme of things, and then it moves into the, currencies will react off of one thing, and then next thing you have markets reacting off of those movements, right, off of economic dollars. And so all of that is going to be coming into play this week, and that's just how we kick off the week. Okay. And then, of course, going back to the general economic calendar, the next big thing on the agenda are the FOMC minutes. Oops, sorry, I didn't mean to move that screen. The FOMC minutes are on Wednesday. The next big thing, there we go, for that would be paying attention to this week globally is going to give us a lot of other economic interest rate decisions. And both the ECB and the FOMC are reporting, are releasing, excuse me, their minute notes from the last meeting, which was also the same week a couple of weeks ago, or 3, 4 weeks ago now. Yeah, something like that. And so, what's going to be very interesting is how they those minutes tie into what we hear from, for example, Mr. Dudley tomorrow, okay, or on Friday, and some of our other Fed heads that we have been hearing. Okay, so that's going to be something that's going to be kind of on watch from, and that's not even including the other U.S. economic data points. It's just kind of some of the bigger highlights. Clearly, the biggest highlight of U.S. economic data is going to come on Friday with the on Friday with the non-farm payroll numbers in the morning. Oops, sorry about that, guys. I don't know. Let me take that back. Sorry about that. Um, So that's going to be Friday, and that's going to be the bigger effect. Sorry, we've lost the page here on that. But that's Friday's economic data. And of course, that's going to be one of those, oh, we have got to see what's going to happen from these numbers because we need them to line up towards the potentials of the next interest rate increases that we've been talking about. And, is it with the pace of continued economic growth? That's the other big deal is, are we on pace? And we know last week's jobless claims numbers were good, but not what we were expecting them to be. And so all of these things are being measured out and lined up still moving forward. Um, Maybe not necessarily as big US news, but still something that we're going to be talking about. I have highlighted this already several times in our AOD sessions, just because it gives the potential for some movement in some of the oil stocks, and it opens the door for a few new trade ideas. Um, OPEC has, of course, been reworking and reworking the um, issues with inventory numbers and output numbers as we've been getting them. There have been some progress reports, if you will, on some of this in terms of Iraq getting its numbers back to nearly the agreed upon output, which is actually a very big deal. It's a very positive scenario that is set up. And there is a lot of analysis and speculation that is actually saying or showing, excuse me, that there is every potential for the output to successfully have the necessary cuts moving forward. Now, what this will mean for oil is that we are very, very likely to see oil prices starting to get back in line with kind of what um, was the expectation all along in price movement. Now, if we're looking at our oil prices here, there we go. We suffered really, really big last month around the issue of a question of production levels, a lot having to do with the U.S. and some question on Saudi's output and some other things that were starting to move in there. And in the last week, in the last week, we have managed to recover and come back for a good amount of this. Now, right now we're just looking at West Texas crude oil. You could look at a variety of different crude oil futures as well, and one of the main ones being Brent crude oil. And what's interesting is just that we are seeing a comeback, and what we're gauging is a lot of positivity towards um, the recovery just beginning. So is where there's a lot of expectation that these numbers are going to continue to climb, excuse me, into the summertime, and that will be a very big positive. So again, we bring this back to the main part of the conversation, and how does this work and benefit us? Well, there's a lot that it would give us into the sector of oil and energy, which was in some instances, depending on how closely linked to oil prices directly it is, because some oil energy stocks are a little bit more distant. And so a few more dominoes have to fall in front of them before they start mimicking the direction of oil, right? Um, but in general, we were seeing that there was a comeback, right? That we were mirroring with oil comeback prices. Not all of the oil energy stocks are going to do this, but we had some that were showing that strength. And so again, if you line this up appropriately, you might find that some of these would work with that recovery. And then later on, if that actually holds and investors are happy about it and it continues, what we find later and beyond this is that the rest of the sector also has every possibility to shift into that direction and into that movement and get more bullish all around. Okay, so not everything is necessarily getting bullish right now. Like Hess is still struggling with this overall direction. Okay, we did break highs on this movement recovering, but it didn't hold the recovery like some of the others, and that's kind of the thing to notice and pay attention. But some are, and it gives us again a door, an opportunity to have something to trade. And here's an entire sector's worth, following that momentum and following that movement. Okay, so again, just some of the highlights for this week are really some things that are not necessarily measurable today, but will provide volatility and hopefully, at least sector wise, some opportunities to find in those sectors trades that we can take and continue the momentum going forward. Okay. All right, so that kind of wraps up my overall thoughts for this week. I think that we are kind of at a precipice of um, anything can kind of happen. This week has a few highlights that are more one offs. And next week, we'll go into some more measured volatility as we're going into the start of the earnings season. Okay. Again, the president's meeting tomorrow, FOMC minutes later this week, non-farm payroll clearly on Friday. All of these are going to be things that the market and investors and everybody is watching collectively to kind of measure out, what's worth it and that sort of thing. So we're going to be paying attention to that and we're going to be writing those flows. Now, really quick, actually, before we fully sign off, I want to revisit the direction we're sitting in, okay, going into this next quarter, which is, sorry, let me get back to that. And just pull up the diamonds here. Which is the fact that we had started, excuse me, a pullback to a longer term direction. Okay. Um, Now, not forgetting that clearly we're at the beginning of a earnings season and lots of things can shift up over the next few weeks. We are at a very good point of a pullback to find a bounce somewhere in this momentum and take new direction to the upside. When we look at the overall range of this, and I'll probably have to replug this a couple times, but hold on. If you will bear with me. Ah, no, perfect. Now again, this is the weekly time frame. Okay, so I'm really looking at long term. But what I want to point out is that there's all the potential on a long term time frame to get to 230 points on the diamonds. That's 20. Let's see. That's 2,300 on the Dow. 23,000, excuse me, on the Dow. That's a lot. That is a big accomplishment. What the last quarter showed us in particular is that being able to break all of these kinds of um, resistance points, major levels of oh, milestones. There we go. That's the word I'm looking for. Milestones shows us that we could really have a very exciting year ahead of us. We're sitting near highs. We're really not that far away. Now, none of this says, well, what if we have more of a pullback? And we could. We've had now, this is really about the shallowest of retracements one could do. Serious. But so we could see this pull back and give us an even deeper C retracement. It's very, very possible. But the information and the position where we're sitting on currently today, going into tomorrow, as a fresh trading day for the week. Yeah, no, it it definitely carries more that we're at the potential of a point of an upturn. Okay, now, like I said, there is a lot of volatility, one-offs that are on the table this week, so we can't say specifically, okay, that we won't see this actually turn into a bounce. It's very, very possible. So just keep that all in mind. And that's just one thing. I love seeing that we have actually pulled back this neatly and uniformly into this movement for the potential of a bounce. I think this is awesome. I think this is a great way to start a Monday. You know what I'm saying? So let's just see where it takes us. And at the beginning of the earnings season. Okay, so let's see where it takes us. And just keep in mind where all the volatility plugs in. You know, these sectors that are having very uniform together movements, it speaks volumes, right? It speaks volumes to where there is still opportunity and possibilities. So even though the market is giving us a lot of indecisiveness to things, some sectors are not so indecisive. And just watching and paying attention now, don't get sector heavy means, don't go and trade 12 different things that are in one sector. Please do not do that. But my point is, you're going to find things that are going to have depth and direction and all of that. Go for the stronger ones. Go for the ones that have the bigger day to day movements. Lock in your profits when you can, move up your stop losses frequently, and you should be able to stay on the better side of this market so that even if there is a turnaround, as long as you are keeping up with your positions moving forward and being strong, then you'll still be further ahead for every time you close in on those moves that are being positive than in that one cut that you might make as everything turns around. Okay? We got to keep that in the back of our minds. All right. So that really brings me to the conclusion of this week's weekly Spy the Market. And of course, as always, we will ride through the week following more closely, much more specifically, what is happening, what's going on our AOD sessions. And of course, invite you to join us for those if you can, or speak to an account rep. Find out how you can get access. Everybody have a fantastic trading week, and I'll be back next Sunday to wrap up and reintroduce the second week of the quarter and what's going on. So, have a good one. Enjoy the rest of your weekend and see you on Monday. Adios.